Hello and welcome to the Business Standard Morning Show. I'm Binu Sandhu. Let's take a look at the headlines. Hundreds of Apple loyalists, some of them from Rajasthan and Madhya Pradesh, erupted in joy when Tim Cook flung open the doors of Apple's store in Delhi's upmarket Saket on Thursday morning. Just 2 days ago, Mumbai's Bandra Kurla complex also witnessed similar excitement, where the Apple CEO launched the company's first retail store in India. For Apple, this is another very visible example of the bet it has placed on India, not just as a manufacturing base, but also as a market. Now the question is, can Apple replicate its China success in India? Bhaswar Kumar brings you the answer.
Until now, you could buy Apple products either online or through a network of the company's premium resellers. Now, the Mumbai store, with its design inspired by the city's famous black and yellow taxis, and the Delhi store, which takes inspiration from the city's many historic gates, will allow Apple to sell its products directly to you. The store opening come at a time when Apple has placed two broad bets on India. The first is that it can de-risk the manufacturing of its devices by shifting some of the capacity away from China to India, along with other countries like Vietnam. Progress has already been made on this front. Exports of made-in-India iPhones jumped about 4 times to top $5 billion in FY23 as compared to FY22. The other bet is that India's market is potentially massive and could power Apple's sales growth. Here too, some changes have already been hinted at. According to Bloomberg, Apple Inc. is reshuffling the management of its international businesses, with India set to become its own sales region for the first time. The move hasn't been officially announced yet, but during the last earnings call, CEO Tim Cook reportedly compared the current state of Apple's operations in India to its early years in China, adding that Apple was applying in India the lessons it had learned in China years ago. But looking to the Indian market to replicate what China did for Apple's business in the past 15 years is not without its associated challenges. At present, China generates about $75 billion a year for Apple, making it the tech giant's biggest sales region after the Americas and Europe. On the other hand, Apple India's consolidated revenue touched an all-time high of slightly more than $4 billion in the financial year 2022. Apple follows an October to September fiscal year. Also, its most popular offering, the iPhone, is still an aspirational product in India's price-sensitive market, where more than 95% of smartphones run on Google's Android platform. Against this backdrop, will the Mumbai and Delhi stores help Apple boost its sales in India? And will they help increase its market share?
These stores will not have direct and very near impact on the sales, because right now, India is still, as you said, a price-sensitive market. Apple plays in 40,000 plus, which is only 7% of the market, which can grow. But I think that limits Apple's growth potential also when 80% of the market is less than 25,000 rupees. This will have a positive rub-off effect gradually, in the sense that consumers will experience the products, and it will possibly push the competition also to have similar kind of experience in the stores.
I think India is now a very important market for Apple. It's the world's second largest smartphone market, and Apple's share in India is still around 5 to 6%, which is the lowest among the top 5 countries where Apple operates. So if you look at from the store strategy, I think what the key takeaway here is not about the sales, but it's more about the experience. So Apple wants to control end-to-end experience of the users.
Meanwhile, at $7,130, India per capita income in purchasing power parity, or PPP, terms is the lowest among the 26 countries where Apple has a brick-and-mortar retail presence. Still, according to the media report that highlighted this point, India's size and skewed income distribution end up making it an attractive market for Apple. Furthermore, market research firm Counterpoint estimates that India's premium smartphone category is clocking 11% annual growth. And Apple, which accounted for over a third of the premium smartphones shipped in the country last year, is the leader in this category. Still, the premium segment will only account for 13% of the overall market by volumes in 2023. Also, there is some disagreement on exactly how robust and large India's middle class, which drives consumption, really is. For example, a 2022 report by the Institute for Competitiveness, based on government data, found that a monthly wage of 25,000 rupees would land an Indian among the top 10% of earners in the country. With that in mind, what do experts think about Apple's chances of replicating its China success story in India?
Replicating China story is slightly difficult because their per capita income is 2 to 3 times more than India. Their average selling price of the phone is about 2.5 times in India. They have 90% plus penetration. India has less than 50% penetration, which is obviously a positive thing. That's why Apple wants to be here. There's no other market which still has 500 million non-smartphone users, and they would come from either upgrade or new to smartphone users. Obviously, Apple will not be able to capture all of them because they are a premium brand in India.
Will it be able to replicate the same success? We don't know yet. What Apple is doing correctly in the India market is they are increasing the affordability factor. So they are not just selling the 70,000 rupees phone. So you can buy a iPhone at like 3,000, 4,000 rupees, going on a 24-month EMI plan. So that way you can, shift a lot of Android user base to the Apple ecosystem.
Experts feel that while replicating the China story may be a tough task, Apple will increasingly look to India to drive growth. For its part, Apple will take heart in knowing that in 2008, when it first set up its first retail store in China, the country's per capita income was similar to where India's stands today. So, its bet may pay off as India remains a bright spot in an otherwise gloomy global economy.
Apple Inc. was also keen on buying IPL media rights for the 5-year cycle beginning 2023. But the California tech giant pulled out of the auction along with Amazon and Alphabet last year. Moving on, if you have been following the latest season of IPL, Rinku Singh's last over heroics in the match between KKR and Gujarat Titans on April 9 are sure to have taken your breath away. With his stellar performance, Rinku Singh found himself in a long line of IPL players who, while not billed at the top in the annual auction, proved to be the most valued performers for the teams. So are undercard IPL players the real MVPs of the game? And are their price tags lighter than their value? Debargyo Sanyal looks at the scorecard.
The Kolkata Knight Riders were chasing a strong target of 204 put up by the Gujarat Titans in the 13th match of the ongoing Indian Premier League. With 29 runs needed in the last over, Gujarat's captain Rashid Khan would have believed the game was theirs. But KKR's Rinku Singh had some ambitious plans for the evening. The experienced Ranji hitter from UP stepped up and sent 5 consecutive deliveries flying over the boundary, clinching the game for the Knights. Despite shining stats in IPL and other tournaments, Singh's on-field numbers are not matched by the numbers on his paycheck. His current pay stub from KKR reads a paltry 55 lakh rupees compared to his teammates like Shreyas Iyer or Varun Chakravarti, both of whom earn upwards of 12 crore rupees. Pundits believe if Singh continues to showcase an impressive performance this season, a major bump in paycheck is awaited in the next auction. In fact, Singh isn't the only star in this constellation of undercard players who have gone on to make a big splash in the IPL. From Devdutt Padikkal, Sanju Samson, Ambati Rayudu or Harshal Patel, and from Rahul Tewatia to Ravi Bishnoi, the history of Indian Premier League had many a breakout stars that began as undercard players but went on to outperform their modest price tags. Many of these players hail from Tier 2 and Tier 3 towns, places that generally lack the training facilities available in mega cities like Delhi and Mumbai. Is it then safe to say that the influx of cricketing talent from smaller towns is symptomatic of better facilities and cricketing ecosystem at the grassroots?
If you look at the local state associations, they do their bit. They have their regular camps, they have trials to spot new players, and they look after them by training at their own association grounds. And BCCI also conducts regular national zonal camps for them. So the talented ones will not be deprived. They get to attend these zonal camps. So it is a well-groomed, well-planned process. Even a place like, say, you take, for example, Meerut. Meerut has a couple of coaching centers where they get modern facilities. And what is facility? You have to have a ball to come and bowl at the nets. And somebody like Rinku Singh, you have such a burning desire to success. So somebody who has made a resolve to make it big, nobody can stop him.
Others point at the need for effective distribution of BCCI's funds to the players from smaller towns.
So I think there's certainly a need for a greater deal of vigilance as to how cricket is run at the district level onwards. I think there needs to be a really push for greater governance strictness when it comes to things like where does the money go? Where does the money finally end up? You would like the money that's there in the BCCI's coffers, which they give out to state associations, it has to be said, to reach down to the players and not get stuck in some safe deposit, fixed deposit somewhere. I think that will also give more reason for women to and players from smaller towns to be able to come and play. One ground per district is not a big thing. It's not a big ask. At least you'll be able to get people from the surrounding region into that district headquarter to be able to play, coach, compete.
Today, IPL is a platform for cricketers from small towns to get noticed and earn a jump in their income. But over the years, players like Jaydev Unadkat, Yusuf Pathan and Saurabh Tiwari, who were sold for huge amounts in the aftermath of a glorious season, saw their value drop sharply after they failed to maintain their form. Rinku Singh too had roller coaster experience in IPL. The cricketer from Aligarh was bought by Punjab Kings for 10 lakh rupees in 2017, but did not get to make his debut. Next year, Singh was sold for 80 lakh rupees to KKR. Singh played only 4 games in 2018, 5 in 2019, and a solitary game in 2020. He missed the 2021 season due to an injury. Thus, while KKR backed him and retained him in the 2022 auction, his price dropped to 55 lakh rupees. So what are some of the ways to incentivize players into building a steady career in both men's and women's T20 cricket league, irrespective of their selection to the national team? Can a stable pay structure at the state and Ranji level help stabilize the erratic graph of their IPL salaries?
There is a standardized salary structure, but it's ad hoc. And this is a random number that players just get. They don't know how it's arrived at. There is a great deal of we are handing this out to you as a largesse, that we're giving you all this money. We're increasing your salary by 20,000 rupees. That's, be grateful. There's no union to have them get into sort of collective bargaining agreements of any kind. It's a professional sport that's being run from an amateur age.
Cricket analysts believe the stellar performance of small town boys in IPL indicates an overall improvement in cricketing infrastructure at the grassroots level. But a lot needs to be done as well. Standardizing salaries and remuneration at the state and district level can eliminate the impact of discrepant IPL price tags among players. It will also help incentivize top IPL performers hailing from small towns to pursue a steady career in the league.
Temperatures meanwhile are rising, not just in IPL stadiums, but off the field too. The soaring mercury is driving up the sale of air conditioners, coolers and similar products. So is it the time to invest in consumer appliance stocks? Harshita Singh's report has the answer.
select stocks of consumer appliance companies, especially makers of cooling products, have swiftly gained this year on hopes of strong seasonal demand this summer. On a year-to-date basis, Voltas, Havells India, Symphony, Blue Star and PG Electroplast have gained 6 to 27% versus a 2% and 3% decline in the BSE Sensex and BSE Consumer Durables indices. Earlier this week, the IMD issued a heatwave alert for parts of North, East and Central India. With the mercury currently on the boil, analysts remain bullish on white good companies as they see more upside in the shares over the near term and advise investors to pick stocks selectively.
We anticipate good volume-led growth for consumer appliances like air conditioners, air coolers, refrigerators, fans and voltage stabilizers. The demand will be led by rising temperatures across the country. Also, there is a prediction of strong summer season, which has led to most of the companies ramping up their production capacities. We believe that there is still 10 to 15% upside left in the consumer appliances stocks from current price levels. Amongst the top picks, our top pick is Blue Star. We like Blue Star because of its backward integration, stable market share, as well as varied product range from affordable to premium air conditioners. We also believe that Symphony would be posting strong domestic volume growth in the summer season. However, we are cautious on its overseas business.
Even though unseasonal rains in March dampened momentum for ACs and coolers, the demand for these products has picked up over the past week, according to industry executives. The Consumer Electronics and Appliances Manufacturers Association, or CEAMA, expects a 15 to 20% rise in sales of refrigerators and ACs this summer. That said, experts remain constructive on the space even from the long term, given the low penetration levels of white goods in Indian households.
We've read about soaring temperatures in many places. This will potentially have a favorable impact on demand on most products that have a strong seasonality during summers, including consumer durables. Such instances typically act as triggers for increasing penetration levels, which are at abysmally low levels. So less than 7% of Indian households have air conditioners. While that number is 40% for refrigerators, it is still below global benchmarks. We believe that the entire space is a multi-year structural growth opportunity. In addition, the sector will have tailwinds from declining commodity prices. Anyways, for margins, there is a low base effect. This is a consumer-facing sector with a long runway for growth, and hence valuations are likely to remain at elevated levels.
Meanwhile, analysts at BNP Paribas said they prefer white goods to cable companies, as they believe the current valuations offer an upside. The brokerage's top picks are Havells and Whirlpool, while its preferred play for the upcoming summer remains Voltas. Thus, investors should look to selectively add summer appliance stocks at current levels, say analysts. Today, the street's reaction to HCL Tech's Q4 numbers will be tracked. Reliance Industries will also be in focus ahead of its Q4 results.
India has several types of investment instruments that attract people with the promise of good returns. Chit funds are one of them. But they also have been in the news for wrong reasons. West Bengal's chit fund scam is one such example, and so is the recent one in Andhra Pradesh. Now, what are chit funds? Raghav Agarwal explains.
In a chit fund, a group of people or members contribute a fixed amount every month for a fixed period of time to a corpus. Later, the member who bids the lowest amount for the corpus gets the money. It is both a saving as well as a credit product. Let us understand it with an example. Suppose 10 people come together and agree to deposit 1,000 rupees every month for 10 months in a pot. Here, the duration needs to be equal to the number of members. There is also a foreman who manages the fund and gets a fixed commission in return. At the end of the first month, 10 members would have deposited 10,000 rupees in the pot. The fund will then conduct a bidding process. The members will have to bid for the pot at a discount. The person with the highest discount will receive the money. Let us suppose that one member A bids for it at a discount of 1,000 rupees, B bids for it at a discount of 800 rupees and C at a discount of 500 rupees. A has the highest discount and thus they will receive 9,000 rupees from the pot value. The remaining 1,000 rupees will be distributed equally among the 10 members. Foreman's commission will be paid by A from his share. From next month, all 10 will continue investing 1,000 rupees in the corpus. Also now, A will not be able to bid again during the duration of the fund. Like this, all members of the fund get a chance to win the fund. However, A will receive dividends if other members bid with deeper cuts in subsequent months. The chit funds are often started by friends or relatives. They offer easy access to money and there is high trust among the members. Moreover, there is not much impact of interest rate hikes. The dividends collected are tax-free and everybody has a chance to get their money back. These funds are regulated by the Chit Fund Act of 1982. It requires the foreman to register the fund with the respective state governments. The owner of the chit fund has to pay 100% of the chit value as a security with the registrar. The deposited amount can only be withdrawn after the said chit group closes and every subscriber is paid what is due to them. However, despite everything, these funds may lead to scams and frauds. Big chit funds often appoint agents to add more people. They are given high commission, in some cases as high as 40% of the money invested in the fund. These agents promise to give 3 to 4 times returns to the subscribers. Like this, the fund gets converted into a multi-level marketing scheme. Gradually, the money is paid to the old members not from the returns on investments but from the money paid by new subscribers. The liabilities soon surpass the actual assets of the fund. Now, if the fund elopes, the entire money of the investors gets lost. This took place in West Bengal's Sharada Chit Fund scam and the Rose Valley scam.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Chhattisgarh, meanwhile, has set a good example. Police and district administrations across the state recovered and returned 30 crore rupees to 37,000 investors who had lost their money between 2015 and 2017. That's all for today. For more news and analysis, please log into business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.